Hello and welcome to Ensuring Success 2022. This session is sponsored by ADP and it concerns multi-state and other tax-related issues for employees post-COVID. First, I'd like to introduce myself, our panel, and our sponsors for this event. I am Gail Perry, Editor-in-Chief of CPA Practice Advisor Magazine. And before we get into our panel, I'll mention we have several sponsors who are making this event possible for us. And they include ADP, Avalara, BotKeeper, Corpay One, CPA.com, Canopy, Caseware, Field Guide, eFile for Biz, Intuit, Right Networks, SafeSend, Sage, Suralink, TaxFile, Tech Guru, Xero, and Zoho. Today, we are joined by Darren Root, Shana Chapman, and Michael Smith, and my cohort and co-monitor, Alexander DeFelice. I'll have them each introduce themselves quickly, and then we'll get into talking about our topic. Darren?
My name is Darren Root. I have been a practicing CPA for 35 years. Founded a company called RootWorks, and we're a part of Right Networks now, and I'm their chief strategist.
Hi, I'm Shana Chapman. I have a firm, Shana Co. LLC, in Gallipolis, Ohio, and I operate a firm that caters to small businesses and tax and CAS services and payroll and all those kind of things.
And I'm Michael Smith. I'm one of the directors of tax with ADP. I'm a CPA by trade and training. Did spend about 15 years in public practice since I've been with ADP. Spent a lot of time on the tax credit side that we'll talk about, and a lot with the assistance to small businesses.
And I'm Alexandra DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California, and co-moderating all the sessions today and tomorrow with Gail.
All right, and just as a reminder for you who are attending, there is a Ask a Question box on the bottom of your screen. If you would like to pose any questions to our speakers, you can do it there. If you're having any technical difficulties, you can post something there, and our tech team is standing by to help you. Or any comments about our topic, feel free to jump in there with shared experiences or anything you'd like to discuss. So today we're talking about multi-state and remote worker tax issues post-COVID. And let's dig into the situation of what happens when an employee lives in one state, works in another. In particular, since COVID has occurred and companies have been allowing people to work remotely from home, and those homes might be across state lines, especially in border communities, which Shana can talk about. What kind of tax issues are arising relating to that?
Do you want me to start?
Yeah, why don't you start with some experiences? Sure.
Yeah, so I have a small firm, which we have small business clients, but we ourselves are also, like you said, on a border state, or we're in a border area between Ohio and West Virginia. And so during COVID, a lot of things changed, right? We've talked about this over and over again. A lot of people went home to work remote. So clients did start asking, what do we do when people move from state to state? Like now, they may have worked in Ohio for us on site, but now they're going home to West Virginia and working there. What's our responsibilities? And not only did my clients have those questions, but I have the same questions now that even as COVID was passing, but we're still working remotely and hiring more remotely, the same type of things are happening, not just on the border. And so there's a lot to it, actually, which I can't wait to hear Michael talk about, too. There's really a lot to that. And so it's not just about payroll taxes, but it's also about your HR policies. There's just so much involved.
Right. Yeah, I mean, to just kind of leverage what you're saying, Shana, we were moving towards a kind of remote hybrid workforce anyway prior to COVID. With the embracement of technology, the pandemic, work from home kind of accelerated some of this. Many of the states kind of suspended some of their rules for 2020 and 21. But now with 22, people are kind of back in the office, or companies are trying to get people back into the office. So it's bringing up some issues with compliance. What do you do now if you don't return full time? Is there going to be a 5-day work week again, or is it going to be something different, more of a hybrid location? So, we're looking through those issues. I think everyone is, whether you're a practitioner, whether you're a business. Larger businesses seem to be a little bit more, I guess, structured so that they can maybe identify where employees are. But there's also examples out there where Gail, you mentioned, in a border state, but people also had second homes where they were actually relocating to. And oftentimes they did not allow, or maybe they did not notify their employer that they were moving to that second or that vacation home. So again, that's some of the challenges that are out there right now, and will continue.
Michael, I know we were all chatting before we came out today. 10 years ago, the traditional accounting firm, everybody sort of showed up in the office in one state and did their work. And so you did payroll and you filed your corporate tax return or whatever you were in that state, and it was fairly straightforward. Today, firms are now hiring wherever they can find somebody. Does that start creating some level of nexus with other states? What complexities are there for just the small accounting firm today? And then what happens if you're hiring international workers? Let's say you're outsourcing things to another country.
Right. Yeah, it extends not only for CPA firms that are looking for resources. There's other types of small businesses. For instance, in the technology community, they were often already using remote workers in different states, maybe outside the country. And so there could be not only issues regarding payroll, but there could be other income tax issues. Shana, we discussed an issue that you had where you were trying to hire a remote worker in the same state, but it also created potentially another tax issue for you.
Oh, that's correct. Like in the state of Ohio, we have municipal income tax returns. And so what happens if I hire a remote employee within my own state, but now we have muni issues. So you have to go look at the Ohio rules. Do I have to file now and withhold income tax in his city, or can I do it in my city? And even if I can do it in my city, do I really want to do that to him? Because that makes his filing of income taxes at the end of the year that much more complicated, right? So there's a lot of questions, not just at the state level, but even at smaller tax levels, for sure.
What I think is really interesting about this, guys, is that we're struggling to figure this out for ourselves. Mm-hmm. If you actually have a payroll practice, where you're doing payroll for clients as a practitioner, imagine the complexities that start coming into that payroll practice. It's no longer they just give you hours, you drop them in and print off paychecks. All of a sudden, there's got to be procedures and policies to figure out where people live, and are they moving? What's happening?
Right. And I would agree. Again, there's some guidance that have been out there. There's probably more guidance that's coming. As we move into a legislature season, we're starting to see states kind of develop maybe some language to try and address the remote hybrid workforce. And again, Darren, as you mentioned, looking for resources, they're not always going to be in the same locale as perhaps your main office or one of your offices. So you may have to look at that remote, and what does that do? Is that a temporary remote? Is that a permanent employee? There's some thresholds that are out there as well. Some states like New York have a 14-day threshold that you would have to start paying tax. Other states like Illinois, there is 30 days. There's some legislative effort at the federal level to maybe make that a standard 30 days for all states. But again, that hasn't gone far. So there's still some other things that are out there to be, thought through. And again, companies need to kind of understand, if you hire remote employees, that remote employee always going to be working at their home, or will they be at an ancillary location? And how long? And I know, Shana, you got a real life example where you kind of thought through that some too.
Well, so I have remote employees now in multiple states, not just a couple. From last year I had somebody in Nevada, Missouri, Virginia, Pennsylvania, And at first, it's all happy-go-lucky, like, I'm just going to go hire somebody, and it's going to be super easy. And maybe it would have been pre-COVID before everybody was on to the fact that people were hiring remote people, and you probably could have snuck them in. But now, even the government is aware these people are working remotely and arguing about who gets the tax dollars from them, right? We've seen that in the news. So in my mind, being legalistic, being an accountant, I'm thinking, oh my goodness, I worry about things a little bit. And what are all of my responsibilities? How am I going to do this? And so I had to worry about, policies as much as location. What are the rules in these various states? And I better get registered in the states and do this correctly. Everything from workers' comp to unemployment to withholding. I better register my business and do it correctly. And I think that's something that a lot of people don't even think about.
Right.
It's funny you say that because a question just came in from the audience, actually, which was, do employers have to register for unemployment in various remote states? Assuming yes, what nexus issues does this create for sales and tax and income?
Yes.
I mean, I think that's one of the big questions. As an accounting firm owner myself, what I see here is an opportunity, because this is so complex, an opportunity for more advisory services. There's a whole plethora of advisory services now just around payroll. Is there nexus? Is there unemployment issues? Is every single state sort of treats this differently, right, Michael?
Yeah, and there's some convenience of employer rules out there that allow you to maybe tax where the office location is or where the principal services are being delivered. But again, some states may see that they're losing out on revenue, so they may act to change that. We don't know yet, but there are some of those emerging kind of compliance issues. So great question. As Darren said, not an easy answer, and we may not have an easy answer for some time as really states and really companies address, as they move back more to an in-office environment, what does that mean to them as a business? Is it going to be 5 days a week, 4 days, some remote additional workers? So
We want to pause for just one quick moment. We're going to hear a word from our sponsor, ADP, and then we will be back with your first CPE code for this session.
The design of Accountant Connect literally started with a handful of accountants from across the country. We gave them a whiteboard and said, draw. Let us know, how would you want to access your client's information? And could we take some tools or resources along the way and blend them into the experience?
ADP Accountant Connect helps me and my partners be more efficient and productive because the portal's like a one-stop shop.
Having one dashboard to see all the client information and pull up anything from payroll reporting, the Run platform, it's just a lot easier through one dashboard like Accountant Connect.
And it saves me a ton of time in a business where an accountant is always very busy and our time is very valuable.
Data security, keeping things confidential is of utmost importance. So ADP does value that priority with the Accountant Connect and just having one login and password.
What's valuable about the ADP data set is its depth and its breadth. It's not just about audit or tax, and even advisory services has expanded. They can provide jobs data, compensation data across the board to help CPAs themselves, help their firms, help their companies, but maybe more importantly, even help their clients.
ADP's Accountant Connect allows accountants to ultimately consult with their clients to put them in a position to win.
Welcome back, and please look at the bottom of your screen. You'll want to record the first CPE code for this session. So in order to get CPE credit for this session, you'll need to record 3 codes. This is the first one. Each code is a 3-digit code, and you'll just write these down, and at the end of the day or tomorrow or whenever you're ready to collect CPE credit, just go to the Get CPE Credit option at the top of your screen on the menu or the navigation bar up there, and it will take you to a screen where you enter these codes and you can download your certificates from there. So, Alexandra, did you want to dig into some information about the poll?
I did. We launched a poll, and the question is, one moment here. Have you? I think I'm sending them to the audience. Okay. Have you what have you experienced involving tax withholding for employees working in other states? So this is the audience. 43% said we carefully observe withholding requirements for employees temporarily present in a state other than their normal work location. 24% said employees have expressed concerns regarding multi-state withholding and are having to file income tax returns in more than one state. 2% said state tax auditors have audited our company for withholding compliance. And 31.5% said all of the above.
Oh, wow. Yeah. It's not easy. And going back to your thing about even being a payroll advisor as firms that maybe do payroll work for people, it reminds me a little bit of sales tax issues we got into, right? Like, do we have sales tax? Do we not have sales tax? And I know that's not what this particular session is about, but it reminds me of the same issues. You know, do we need to be doing it in this state or that state? And we need guidance. You know,
I think for most SMBs that I have run across over the years, this is off the radar. They don't have HR departments. They're not paying attention to this. It's a real issue. And it's going to be probably easier and easier over time for state governments to surface challenges. And so I think firms have to start paying attention to this issue.
well, and then going further than the payroll taxes, which this is a kind of payroll tax, I guess, but like workers' comp, some states, your workers' comp policy may cover a remote employee. A lot of policies do not cover a remote employee. Some states you don't have to have workers' comp. You buy it like from a third party. Other states you have to get it through the state. You know, it's so various from state to state, and it's hard to keep track of. So it's really good to have some kind of human resources or somebody on your side to help you figure this out for sure.
There could also be additional benefits, whether, you know, it's like medical leave, paid leave. Different states have different requirements. Some require pre-tax benefits for like transportation to be made eligible if you have a remote worker or in a certain location. So beyond just the payroll withholding, which could trigger, as Darren, as you mentioned, that could trigger additional taxable events, everyone has to be kind of aware of what's happening, you know, and how do you know where your employees truly are? Again, they have a permanent residence that they have not sold, that they still function, but they're at their vacation home, and that's a different state. So how do you know? And I know we're going to get into a little bit of the temporary presence rules and so forth, but.
Yeah, and what are the policies when they're there, and how secure is what they're working on in that location? Because we deal with sensitive data, and they might too, in whatever company your client is in. And we talked a little bit about workers' comp policies from an HR side. You may have been, somebody in the audience may be thinking, you know, why is she so worried about workers' comp? They're not in your office. But you're still responsible for them in their home office. And so if they trip over their computer cord in their home office, you still have responsibility. So what are your policies about that?
So the scary thing here is when you don't know that they're working somewhere else, right? And that's actually a question that we polled them about to say, like, how are you ensuring that you actually know? Because if you know, then you can go through the proper protocols, but not knowing. So so these are some of the answers that the audience gave. They said, our employee policy handbook requires the employees to inform us of address changes. We sent specific guidelines to all remote workers that they need to advise us of changes in their location. We advised all remote workers that any change in location must be approved in advance. We rely on employees to advise us and fill out a new state Form W-4 equivalent if applicable. And we can determine employee locations through technical means, which sounds a little sneaky, and I kind of want to know a little bit more about that one, because one of you guys came up with that choice.
Yeah, and some of that along those lines, you do have to be careful. Larger companies, again, tend to have some infrastructure and policies and handbooks in place that they are able to kind of monitor remote and hybrid type workforces. Smaller to medium-sized businesses, as you have indicated, Shana, do not always have that same infrastructure to track that. As far as, you know, where you are and when you are, There are privacy laws, for instance, in New York, so you have to be careful if you're monitoring employees there. California has additional privacy laws that are fairly strict as well. And, you know, Florida, you can file a domicile form, you know, so if you're there. So, you know, there's different requirements, and so it's very interesting and will be interesting as all of this continues to emerge. And again, we've been kind of accelerated, in my opinion, into this more hybrid remote workforce compared to where we were 3 years ago. So
Again, I mean, we're all professionals, and so we live in this world every day, and we're trying to figure this out for our own businesses. If you're a payroll provider out there, and you're doing payroll for lots of small businesses, they are not thinking this way. And I guess one of the things that always concerns me is it our responsibility as the payroll provider or the processor to figure this out? And I've seen a lot of firms using payroll tools that don't surface information, like intelligence information, so that you can actually act on things like somebody's moved. We need a notification of that, right? So it's really important, if you are providing payroll services, to use tools that start surfacing this kind of information, because it's becoming a real thing.
It's an excellent point.
yeah.
So, Michael, you brought up the concept of temporary presence rules. Do you want to expand on that a little bit?
Yeah, well, again, there's some laws on the books and some, you know, guidance out there as to whether you're in a state at a given time or in a locale. Would you trigger that threshold? Would you, for instance, be in New York over 14 days, or again, Illinois 30 days? And what does that do for the withholding, concern? But as, again, Shane and Darren both mentioned, there could be other tax issues that a practitioner may need to consider, whether you have nexus, whether you need to maybe register to do business in that state, other kind of compliance issues around those temporary presence.
So that's an excellent point, because there are states I don't want to be in.
Right.
And I don't mean that, you know, they're just plain up, I didn't hire you in that state,
Yeah.
and I don't want you to move to that state, and all of a sudden I'm responsible for it. And it's another state. If I'm being responsible and putting everybody, you know, registering all these states, I don't want to suddenly be in a state I don't want to be in. Because it can get real complicated really quickly, and if I want to be in charge of where I want my employees. So that's an excellent point. The policies about where you move and where they're going to be. And you mentioned Florida has the form. Like if you move to Florida, you actually register with Florida that this is your domicile. They actually have a form declaration of domicile that you file. So maybe, you know, if somebody moves there, they need to send that to me, you know. But yeah, so that's an excellent point, because I don't want to get in a state I don't want to be in.
We have a question from the audience, and maybe it's a specific question. It says, in an accounting firm where the employee works in a different state, but all work is conducted over the internet and using the software located in the home office state, where is the accounting firm revenue earned? In the state the employee is inputting, or the state where the computer is located?
Well, but before you guys answer that, because you guys
Right.
are smarter than me on this, the chances of that data being located in the state that the firm is located is probably slim. Right? So if you're using ADP payroll software as an example, chances are it's not located in Indiana in my case. Or if you're using QBO, chances are it's not located in my state. So I'm not sure that we can sort of rest on the idea that it's being done in a particular state. So with that, Michael,
You know, and I'll come back to another question for Darren along those lines. You know, it's hard to answer just based on a short question like that here, but you know, I'd encourage them to look at kind of where they are, the convenience of employer rules. Do those apply to where the services may be delivered versus need to be delivered? And that could maybe answer the question on, you know, where the filings or the compliance needs to happen. And is that at the work from home site, or would that be at the actual employer site, if that helps?
So some of the states that I've looked into as I've expanded into various states will say if the revenue came from that specific, if they're working on a client that's from that
Right.
state, or it's revenue in that state, then I maybe have nexus now in that state and need to think about filing a state income tax return and putting the information in there. And so all those states are different at this point. They all require different things. So that gets real complicated real quick also. That's outside payroll tax. That gets you
Yeah.
into income tax issues. But each state's a little bit different, so you have to check their rules.
So Shana, they said, based on your comment that you don't want to be in certain states, they said, can an employer forbid someone moving to a specific state?
Well, I haven't checked the rules, but I can say,
See no evil here.
I can say that, I would be tempted to say that's not where you lived when I hired you, and I don't have, I would definitely be checking that to make sure that doesn't happen, that you may not have a job. And maybe that's a policy we write beforehand. Listen,
Right.
part of this is when I hire you, you're in this state. If you decide to move, you need to let me know, and I will let you know if I want you to be an employee in that state. Maybe we just preempt that with a policy. Yay for human resource attorneys.
Yeah.
Do you feel like that it's kind of guiding your maybe recruiting going forward, like if they're in certain states or not, or do you just all based upon the skill set that you're looking for at that given time?
No, the rules in the state definitely. Like if I put out a mass thing on Indeed,
Right.
and just say I'm looking for somebody to be in this position, and I see on the resume they're in a certain state, they're rejected, because some states are more complicated. Like you were saying about benefit rules, one of them is in some states every 32 hours you get an accrued sick leave hour, or 1 hour paid off. That's not a big deal. I'm happy to pay that.
Right.
But it's the time and calculating that and tracking that and accruing that is a problem for me. Now, I'm really, if I had more employees, I'd be happy to do it, but one employee is going to cost me a whole lot of work. And so I have to consider whether maybe if they're really worth it, but for a lot of people, no. If they're in a certain state, that's a no.
Right.
Yeah, that's not one of the reasons though, but there are states for reasons.
All right, we're going to take another quick break to hear a word from our sponsor, ADP, and then we will return with your second CPE code for this session.
Hey everybody, Dawn Brolin here, your designated motivator to tell you about ADP Accountant Connect. Oh my goodness, I'm so glad that I found this solution. ADP's free, award-winning, multi-client payroll management and analytics platform. A remarkably effective tool, giving you value for every single client that you're working with. Why would you want to do this? Strengthen your strategic advisory services because the analytical tools are amazing. Boost efficiency within your firm, everything in one place, and position your firm for huge growth and profits. Create a free account today at adp.com/AccountantConnect. You won't be disappointed.
We are back, and we would like you to look at the bottom of your screen right now where we are displaying the second CPE code for this session. So please remember to write that down. If you're planning on collecting CPE credit, there will be one more code before the end of the session. All right, Darren?
So, well, I think what we've decided is payroll's complicated.
Very much.
But with complication, there's lots of opportunity. I'd actually like to see us shift and talk a little bit about the opportunity, Michael. I know you and I talk a lot about this, is the opportunity with R&D credits inside of firms' client bases. This is not so much for the firm, but it's for firms to look at inside their client base and identify, because I think what we both find is firms are not paying, again, attention. They're so busy in compliance work that they're not paying attention to some of these advisory opportunities. So, I mean, what are you seeing with that?
It's amazing again with the pandemic, the kind of this innovation that continues to occur, and again, kind of accelerated. Darren, I know you have personal experience with the R&D credit. Your firm took advantage of that. Technology companies, for instance, life sciences, a number of those companies, again, kind of grew up in kind of this remote hybrid workforce. Very few of them, I find, are actually in a single location. And therefore, as we're looking at opportunities to provide an R&D credit, particularly since the PATH Act of 2015 made it more conducive for smaller businesses to take advantage of it and maybe offset their payroll taxes if they did not have an income tax credit or income tax liability to start with. So, looking for those opportunities where the people are being innovative, they're doing that research and development, they're bringing new ideas or maybe attempting to bring. Failures can be as important as successes in the world of R&D to manage that. And again, with those kind of remote hybrid workers, we have ended up with smaller businesses having a credit maybe in more than one state, because they had someone or some people in those states doing the qualified activities. So,
I mean, I know in our case, in RootWorks, we were developing software platforms, and to be honest, it really didn't cross my mind, even though I'd practiced accounting for 35 years, that I would qualify for an R&D credit until somebody had mentioned it to me somewhere. So it wasn't something that was on my radar screen until I went and checked it out. And as it turned out, we were qualifying for, $80,000, $100,000 a year in tax credits.
right.
That's big.
From the investments we were making. Yeah, it's significant.
I was actually going to ask this, and for tips for what are some flags that that at least to check, like if you're doing this, or that, you should check if you qualify.
Right.
Michael has a great checklist.
Great question. Happy to send that out too. And we have one specifically for practitioners, our CPA checklist. So, but really, if you're doing, I always start out by asking a potential prospect or a client, what are you doing to innovate or to stay competitive in your marketplace? And they're always going to answer that question with, well, we're developing this product or this solution, or we're tweaking this because we feel that's what the market is demanding. So in order for us to succeed and grow, we're looking, at doing this. So it could be a process, it could be a product, it could be, a platform solution or a new technology. So that's one of the first flags I would say that we always look for. Is the effort, those activities being done in the U.S.? That's the other qualifier, so it needs to be done in the U.S. Now, states have their own rules for R&D. That's important, and there's those equivalents too. But, again, the two main ones are, where are your resources that are doing the qualified activities, and what are you doing to remain competitive?
So can you talk? Can you dig into the processes a little bit more? Because if it's a software, if it's something like that, people kind of maybe get that it's an R&D, but processes,
Right.
They're like, well, of course I have to do that. I have to improve what I'm doing. Like I'm just doing that for me. Like how am I going to get a credit for that? Is there an example?
So a lot of the processes occur, and again, any industry can qualify for R&D, but some industries tend to emerge more than others. But the processes could be, am I able to make something more efficient, for instance? Am I able to do something perhaps in a green-friendly way as opposed to, a way that maybe was a bit more pollutant in the prior? Am I able to do things at, in a different method that makes the end product, a stronger product and a stronger build? So again, we did continue to see kind of post-pandemic people doing things maybe with more robotics, maybe more artificial intelligence out there, as opposed to what they were doing to kind of have less kind of people contact, as a safeguard. So again, that efficiency, so there are certain rules that kind of make those processes, but that's a great question. So.
I know, Shana, the advice that I've been giving firms is I don't know much about R&D credits, so I turn to Michael, and and you may be like me, where it's just not what we do or did every day. My advice to any practitioner out there right now is to take your client list, especially your SMB, your small business client list, and go through that list with somebody, whether it's Michael or somebody like Michael that understands this, because the numbers they're just staggering. Michael, we had one of our early cases, I know, you know, you went back and did a carryback for 3 years once we identified, there was a tax credit. And I think the refunds were like almost $800,000
That's right.
for a taxpayer for 3 years. How would you like to be the CPA there, Gail, that maybe missed that for the 3 prior years,
Right.
right, that you can't go back to? So that's how important I think this is, that you get on this and pay attention to it. Don't feel bad if you don't understand R&D credits. I'm with you.
Well, I told you, but before, I was like, this is not my strong. I will admit, I'm a small firm, and it's, you know, if you guys are from small firms out, and the people who are watching today, we're running day to day and keeping up with all the other issues we talked about: payroll tax, sales tax, Nexus, income tax, all those things, and you think of R&D as something that's probably out of our client's realm. So a session like this one's really important because it makes you realize maybe it's not.
It's absolutely not.
Yeah.
I mean, you have, it sure seems like all of us have 1 or 2 or 3 clients that may be a good fit.
Right. Yeah, and again, you know, some of the recent changes, like with the Inflation Reduction Act, for instance, actually, you know, well, let me back up a step. With the PATH Act that made it permanent, the R&D was not permanent till then, even though it had been around since 1981. It was not permanent. It made it more conducive with the PATH Act because it provided this category known as Qualified Small Business, so QSB. So if you meet certain requirements and you do not have an income tax liability, you can offset your payroll taxes. Well, what the Inflation Reduction Act did is it actually doubled that amount. So now up to potentially $500,000 versus $250,000 of your payroll taxes could be offset with an R&D credit. And that really helps out, you know, again, fast-growing technology companies, life sciences companies, companies that tend to run a loss and will not have a use for a tax credit, an income tax credit, to really take advantage of this. And you know, my personal experience has been also that when people start taking advantage of R&D, they start getting the cash back. They actually start doing even more. They're reinvesting those monies into the business and really increasing their R&D going forward. So,
well, R&D credits are certainly important for that reason. It gives them back the money that they're putting in to do the research. I know I recently listened to a podcast somewhere talking about the amount of money like Intel puts into research and development and why it's so important to have those credits back. And so I can imagine even more so at a smaller business level how important that would be.
For sure. Michael, probably most of our listeners don't know that ADP has a division that does tax credits. So it's not to do a commercial for you, but it's probably worth noting that you guys, I mean, talk just a little bit about what you do.
Yeah, we do have about 300 people in our tax credit services division that actually focus on credits and incentives all the time. And so, again, how I kind of got on this initial topic of the hybrid remote workforce is we're starting to see that in some of the incentive legislation and some of the rules coming from the states as to, which may be different than do you qualify to have your taxes withheld there from a payroll side. The economic development arms of many states tend to drive, you know, legislation or interpretations, if you will, of definitions. So what may be a flex worker to them to qualify for a jobs tax incentive, you know, or another types of incentives could be different than what the temporary present rule says. Some of those definitions are emerging, you know, in various states, you know, like Kansas or North Carolina or Arizona. They're actually starting to define what a remote worker is, you know, versus what a hybrid worker or a work from home worker is. And they have very clear-cut definitions about, you know, what you're doing, when you have to report to the state or the site. And that may clear up some of this. But again, it's an evolving area. But yeah, we've got a division that helps do that every single day. That's all that we do. So it's quite a focused effort on our part.
You know, Sheena, I think it's super important for us as small practitioners who do not have all these different skill sets to find the right partners out there that do bring these skill sets to the forefront. I mean, whether it's R&D credits or it's payroll credits or whatever it might be. I think it's important as a small accounting firm to partner with some organizations that have these skill sets. I mean, that's certainly what we found.
Well, and I agree, and it's great to know that you guys have that. I've always said, you know, when you're building a small firm, I like to think of my firm, there's a wagon wheel, and I'm kind of a hub, and I get to point my clients where to go, right, on the spokes, and so I can make ADP a spokes for R&D or certain kind of credits, and that's really helpful, you know, to know, because you can't be a Jill of all trades anymore. There was a time when that was a thing, and it's just the tax code is too voluminous. There's too much going on, and I can't do it all anymore. And so I have to have help. So that's great.
And that's how Michael and I got to know each other. It's just you know, the firm would refer out to Mike. Would look at our client list. He would go through and say, here's one that I think could qualify, and then we as the firm reach out to that client. We gather information. So we're still sort of the hub. And it works great.
That's fantastic to know.
Is there a way we could kind of put these together, and are there examples of situations where firms who during or post-pandemic have created a remote workforce or hybrid or flex workforce in innovative ways that would qualify for R&D credit?
You know, it could be, you know, some examples I can see. Real life has been some firms, some businesses have actually created their own software. So they looked out and decided that an off-the-shelf software was not the best use. So they were willing and had the funding to actually go out and hire someone. Maybe they hired them on their staff to do that. Maybe they hired an outside group to do that. But it was really to help them take advantage of where they are and what they're doing. And, you know, the business models are changing rapidly and will probably continue to change rapidly. So I think we'll see more of that. I think on the, you know, in industry specific, maybe manufacturing, I think they're looking at different technologies so that if people are not able to work, then they have some robotics or they have some additional manufacturing capacity. So, and you know, as the world kind of shifts in terms of different, you know, supply chains and different things being done here or virtually, I think you'll continue to see that innovation, which is going to be R&D, and that's going to be directly related to this new and the kind of hybrid workforce that's out there.
Okay, let's take one more quick break. We have a third message from our sponsor ADP, and when we return, we'll have the third CPE code for this session.
ADP is this big technology company backed by exceptional service, but that really comes down to personal trust.
ADP definitely makes our lives easier as accountants. The guidance, reporting, staying on top of the rules and regulations.
An all-in-one solution. I mean, between payroll, all the resources, ADP has come through in all aspects.
The New Jersey Society of CPAs, we're looking for a partner that wants to provide value to the CPA, their firms, even help their clients.
As CPAs, we're great at helping people and being the trusted advisor.
When I am using a service provider, I always look for someone who's responsive, efficient, and above all, is competent.
Whether we look at our associates from a sales perspective, the service arena, product development, everybody's always designing for people.
Whether it's 401k, benefits like health insurance, existing payroll, ADP is a reliable and trusted partner of our firm.
There's been many smaller providers in the last 20 plus years, but ADP is that good, reliable company that people can count on.
My ADP service rep, Jane, anytime I have an issue, I'm able to get on a call with her, she fixes it.
I'm really thankful for my partnership with ADP because when this client decided to switch to payroll, ADP was right there. They held their hands, understood the situation, and helped provide all the services needed and made me look good.
When it comes to CPA firms, ADP is the gold standard. In my firm, we use ADP.
We marry the technology with the support that they're looking for with that human aspect.
We are back, and we would like to provide for you the third CPE credit for this session. Please look at the bottom of your screen, write this credit down if you're planning on getting CPE credit, and then you will go to the Get CPE Credit menu item at the top of the screen later today or tomorrow or next week or whenever, and enter the codes, and you'll be able to download your certificate. I want to just wrap up one thing on the issue of multi-state workers and part-time, flex, remote, hybrid, all that's tied together. If you're an employer and you've got workers who are moving to a new situation like that, any one of those situations, where do you go to get the answers for all the things that we've talked about, whether it's unemployment or workers' comp or municipal or state tax issues, where you pay it, where do you get all the info that you need?
I can give you my answer, Gail. I mean, we use Accountant Connect, and if you don't know what that is, we've probably ran a couple of commercials. ADP's probably ran a couple of commercials on it, but Accountant Connect is a free platform that you as a firm have access to, and you can connect your clients in there. But there's all these resources that are in there that are free to you. I mean, that's where I probably get most of my information. Michael, is that sort of the place you think?
That's a good place to start, and beyond that, if you want something maybe a bit more technical, you can be directed. Now, there are some click-throughs to, some of the tax research software out there as well. If you want more of a detailed kind of a review, which I know some people like Shana likes to pull the law and read it. So there could be, other efforts that you find, some additional information. Any thoughts from you on that? So.
Well, I've also just called the state. I really have. It said, look, this is really confusing, and I don't really understand what you're trying to say versus another state we're in, so can you clarify what I'm reading here? And I've just picked up the phone. There are some, when you have companies that help with payroll, they have said, hey, look, you're registering payroll in a certain state, you're saying you have an employee in this state. Unlike doing it like if I was doing my own payroll, I might just kind of skip by that part. But when you use a payroll service, they'll say, hey, look, we noticed the person's address is in this state, time to register. And so that is the impetus to get started and making sure that you're along the, doing the correct path.
Right. Yeah. I think one of the keys now, Gail, is to leverage tools, platforms, whatever you want to call them, that are more intelligent, that start surfacing this information people like me and Shana,
rather than trying to dig in. And
well, I mean, you just don't know that somebody moved until you become aware of that.
Yeah.
And I think making sure as you select your technology platforms that you use, that you're selecting ones that have intelligence built into them, so they can start surfacing this, because it's just overwhelming. It's too much.
It is, and I also use a legal system that is online that will help me set up everything for my accounts, for my payroll account. So it'll notice, like my payroll service might notice that I'm in Pennsylvania, and it'll say, hey, you gotta get an employee number. Well, for X amount of dollars, somebody else sets it all up for me. I don't do it. Yeah. It goes straight into a legal system then, and they take care of that for me. And so, and I watch it, because I can't just count that. I just can't count on the legal system, my payroll system to do it. Ultimately, like we tell our clients, it's our name on the line. It's their name on the tax return. It's my name on my firm. And so then I confirm that it's all being done and done right and research it. But I use, because where I live, we have fantastic attorneys. I'm not going to take anything away from our attorneys in a more rural area, but they're not HR attorneys. They're not, payroll attorneys, business attorneys. They're jack of all trade attorneys, or they did a divorce last week and today they're going to set up your company, and that's okay, that's great. But this is very specific information. So I've found some online platforms that will help me set up my companies in various states.
I do have a few other questions coming in from the audience, if there's good time. This is an interesting question. Is there an employee retention tax credit?
Yes, there is. That has been around since Q2 of 2020, so it's still out there. The statutes are still open. You can qualify based on several different, criteria, whether it's gross receipts, whether it's a government mandate that impeded your business. So that is out there. And will continue to be out there for probably about another 12 months before the statute starts falling off. So,
okay, great. This might take too long to explain, so if we need to back burner it or say pass, that's fine. But how remote independent contractors versus employees, does this relieve the burden? How so?
You know, again, I think there's some thresholds out there, whether it's an employee or a contractor, what they're doing in the location, whether, you know, it may relieve some on the withholding side, but it could create some other compliance issues on the tax side. I know, Shana, you've had some of that, and Darren, you have too, so.
I mean, if they're an independent contractor, there's a fairly clear test that you can go through to figure out,
Right.
is that really the case? And if the case is yes, then awesome. But if it's no, I just don't think you can classify somebody as an independent contractor just because you
Right.
decide you want to.
Just because it's more convenient for you.
Yeah.
Can you get into any rules of thumb for navigating the remote worker impact on tax nexus?
Any rules of thumb? You know, I would say larger businesses seem to have some policies and procedures in place that kind of track if there's been, like you're required to kind of do that address change or to let your employer know. I think the smaller to medium-sized businesses maybe, again, do not have that infrastructure. As a result, your practitioner, you may want to ask the questions. And I think, Shana, you got some key thoughts on this too, as far as, what do you do when you don't have that formal kind of employee handbook that says, you got to let me know where you moved within so many days.
So when you start hiring remote employees, that's the time for you to really start formalizing policies because, listen, you know the people in your office, and people have worked for me for 20 years, and if they go down the street to another job, those people will know they had worked for me, and there's a closeness there. But when you get into remote employees, you don't really know these people as well. You don't know how they're going to respond to something legalistically, how they might view something. There's a whole wide world out there of policies that get more into law, I guess. And so for me, look, I'm a tax girl in accounting, but I'm not an attorney, so it's time to get somebody on my side that can help me navigate policies in HR, and that's outside my firm. Now, some firms do manage payroll and HR. I'm not one of those firms, and so again, I've added that spoke onto my onto my wheel that for my clients, and said, okay, now you need to find somebody to manage your HR. You're there. You're going to remote. I had to do that. I went outside my firm to get somebody to manage HR for me, help set up remote policies, because you remember the days when you would hire somebody and they came in and you had a little, you pinned up the workers' comp thing on the board in the back, but if you have all remote people, where are you pinning that at?
Right.
And now you have remote people in a lot of states, and I would have never thought, hey, I better email that to them.
Yeah.
Well, you have HR help now. You go find an HR firm and they will say, you have somebody in Pennsylvania, we're going to automatically email them all this stuff from Pennsylvania. You have somebody in Ohio, we automatically email all that to them. And it's in their portal as an employee. They can't say they didn't get it, they signed for it. And so you really need to be thinking about your HR, and you need to start putting in policies, because these people, like I said, workers' comp, if somebody trips over a wire in their home office.
Right. Well, and as a person that works for a law firm, it's about risk mitigation, right? So if our law firm helps you write those policies, if something happens in the future, they know that you're protected because they wrote those policies. So.
Yes. It's just another thing to add on to the spoke to help clients. And mostly I've done that by helping myself, trying to navigate it myself and then help my clients with it.
Yeah, I think running an accounting firm today has gotten a lot more complicated than it was 35 years ago. And you gotta do it. I mean, you have to get in and you have to build these relationships. You have to create clarity. I mean, back in the old days, people were pretty squishy. If you found somebody, you just hired them. You didn't worry about anything. If you took on a client, you just kind of took them on. You didn't worry about setting expectations and stuff. World's changed, and we need to cross the T's and dot the I's.
Really do, because even things like, Do you have a dress policy for your online Zoom meetings?
Right.
Do you have, I mean, it's the most minute things, but you just don't even think about it. And that goes back to the policy, did you move?
Right.
You know, just all these various things. But if you add in and look at now, we don't just have payroll, but we have HR. Even the smallest of firms have HR once they hit remote.
Yeah.
It's a different ballgame. You've upped it. And it's a little bit costly, but it's a whole less costly than getting into a lawsuit with somebody.
Sure.
Absolutely. All right. Any final thoughts on these issues as we wrap up this session?
I'll give you my final thoughts. There's a ton of opportunities for advisory services. I mean, we just talked about a few here, whether it's ERC, R&D, or payroll issues.
Yeah.
Just a ton of opportunities to help your clients work through these issues.
Yeah, I would say it's been a definite shift in the workforce the last few years. Again, was probably coming about anyway with technology, but the pandemic kind of accelerated it. So as these issues emerge, they'll continue to emerge, and there'll be some guidance coming. I feel comfortable, but we'll probably be talking about this for quite some time, to be honest.
Yeah.
So
I'll be interested to see what Congress does as this goes forward too. We talked about the multi-state worker. It seems to not necessarily be moving anywhere real fast.
Yeah.
But I think that as states start to do their own thing and people see some overreach by some states and states are starting to fight each other about where the workers are located, I'll be interested to see how that all starts to even out a little bit and they fix it.
Yeah, me too. I think there's a lot of reluctance to create any kind of a national legislation that would impact this, but I think with every state having their own laws, it makes it really complicated.
It does.
Yes.
All right, well, thank you so much, all of you, for joining us on this panel. Thank you to ADP for sponsoring this session. Thank you to all of you for watching and participating in this session. We are going to take a brief 1-hour break for lunch, and then we will be back an hour from now.